The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on Thursday's trade, you found a fair amount of red on the screen wherever you looked. Soybeans in particular on the grain side, and cattle had a sharply lower day, which spilled into the hog complex. Corn and wheat, though, for the most part, held up pretty close to unchanged. In fact, December corn was unchanged on the session Thursday. There's a lot for us to dive into. Let's talk about it. Brian Doherty, Senior Market Advisor with Total Farm Marketing, joins us here on the show. Brian, good to talk with you again as we get close to closing out what has been a pretty wild week in the trade with a lot of data points thrown at us and news headlines and much more. It's been an interesting week, to say the least, Brian.
Excuse me, yeah, to say the least, right? So a lot of activity, a lot of things we can talk on. Probably the big news for the week so far is the 2.1 million additional corn acres, and then probably just as impressive, the significant increase in yield. Gosh, what are we looking at now? 188.8 versus 181 a month ago. And then on top of that, you take a look at, well, geez, demand. Look at the cumulative demand that gained 550 million bushels. Well, where was that last month, right? So, so yeah, lots of adjustments, lots of big numbers. Would have been interesting to get the demand increase last month and see what kind of rally we might have gotten for farmers out of that. But it all kind of fits together. I think the USDA is arguably making the point that a big crop is going to create big demand because prices are low. We'll see if that's the case. I got to tell you, the way the market behaved so far this week, it's kind of a yawner. Not much of a reaction for probably one of the more bearish reports on the surface that we've seen in a long time.
And I'd love your perspective on this. We were talking before we went on the air. For instance, if you look at a corn chart, and I mentioned, December corn finished unchanged on the day Thursday. It's hovering just below the $4 mark on the board. And really, it has felt like the corn market has digested this report well, almost as if we had a lot of this priced into the market already. And to your point, you were telling me, you look at a chart, it really doesn't look like there's been a lot of movement this week.
The net change from the report, so since the day prior, the close prior, 10 cents in December corn. That 10 cents could be any week when you look on the chart, when you just have a good weather forecast. And that's really, the other side of this coin is if you look at just the outlook forecast, 6 to 10 day in particular, that looks pretty good. Most of the Midwest had 2 or 3 days in a row where the above normal rainfall, I mean, that's key this time of year. Fill it out. Now, there's a lot of people saying, look, the temperatures are really kind of important here too, because we've been above normal. We're not cooling down at night. So I think there's some healthy skepticism on this high yield. The pre-report estimate was 184. I think that was pragmatic. If you had asked me before, I would have thought that might have been a little high, that the USDA would have August, September, October, November to work themselves up to a bigger crop getting bigger. They kind of swung with a heavy bat, really hit this one out of the park from a big increase. That's significant. The question is now, is the crop really there, or is this overestimated based on more satellite imagery and greenery versus what's actually going to come off the combine?
Well, and something else that comes to my mind, a few people have told me this here this week since the report came out saying, the numbers are what they are. I can't change the numbers, but now it's time to focus on your risk management and managing the market that's trading these numbers. And you always talk about, perception, momentum, attitude in the market. And the perception is big corn crop on the way. Prices, the attitude from a lot of producers is we don't like these prices, and we're mad at USDA and other analysts who've come out with big yield estimates and so much more. But at the end of the day, Brian, it comes down to you're going to have to manage your risk somehow in this window, right?
Right, and I don't know if this is fortunate or unfortunate. I'm going to say fortunate. Another risk that I'm a theme. I always look for theme. That as we talk to producers, that I'm hearing this week is the reality. Hey, this crop looks pretty big. We don't want to jinx it, but what am I going to do with this extra inventory? Right? Where am I going to go with it? Do I leave it in the field? Do I harvest and just sell it spot and call it bonus? Do I pay commercial storage? So that's another risk. Uh, the bigger risk is are we in a position here from two perspectives? From an end user perspective, are we carving at a low and now is not the time to get comfortable? And from the perspective of the producer, well, there's still carry in the market. We need to work with bases. We need to scratch a claw for every dime we can get right now until something tells us otherwise, because at present, well, the carryout number worldwide, carryout in the U.S. Now comfortable, in particular in the U.S., comfortable at over 2.1 billion, 2.117. It's still not. That's still not a dominant number, but the point of it is that we need to shift gears or really focus from the producer perspective of, do I bury my head in the sand and hope? Do I get more aggressive with things like carry and selling call options? Do I use fences all the way out to July for corn I know I'm going to store? What are we really looking at? And so it takes some really good time, energy, effort to kind of focus on that. But I think this is a key focal point. Uh, there's always opportunity somewhere. Sometimes we just got to look for it.
Oh, that is a great thought, great perspective. On the flip side, soybeans, we gained corn acres, big yield estimate. Soybeans lost acres, slight uptick in the national average bean yield estimate on the WASD, and throw in there Monday's post from President Trump calling on China to quadruple their bean purchases and all these things. Soybeans have had a really good rally this week. Thursday, call it profit taking, maybe, if you want to. We gave back a little bit, but the soybean complex, talk about that for us here this week. That has been a source of some volatility, mainly to the upside, Brian.
Well, it has. Now, today, the market sort of maybe took another look at it and said, well, maybe not so quick, because I think the weather forecast looks pretty good for beans. That being said, my 2 cents of opinion is the bean market is now kind of backed into a corner when you think about the supply and demand numbers. So what happened is you took away acres, you increased yield, and you cut carry out 20 million bushels. So 290 million bushels. So use that as our key pivot point. I'm of the opinion that the market was thinking prior to the report, look, the report may say one thing or another, but the weather's pretty good. The crop is probably going to get better or mature out pretty well. But it didn't take long for the market to react. And the reason is, if these numbers hold water, you're back to 290 million bushels of carryout with a record yield at 53.6 forecasted on what? Likely satellite imagery, green up, all of that kind of stuff. It's not, my point is, it's not in the bin. And if there's any market that all of a sudden, I think, just click, check the right column for potential bull, and maybe a very significant bull market, if there's any hiccup elsewhere in the world, is the soybeans. That's not a lot of carryout. On top of that, none of this really looks like it has much merit. When China's not buying, we did get a Trump tweet that gave the market some boost. I guess I'm just choosing to look at it one way, and that is China's a negotiator. China's in negotiations. It's moving toward fall. They don't have to buy. The market was slipping in value. Why would they buy, right? We've got a big crop coming. They see crop ratings. They see weather forecasts, those type of things. Yet likely they will still need to and will be a buyer if the negotiations can go the way that we hope that they go. So I think the setup is there for all of a sudden extra demand that we maybe weren't counting on, or the market wasn't counting on, tightening that carryout potentially anymore. So I'm going to sound very bullish. I'm bullish on the potential both ways. I'm bullish on the potential for some really good price activity. I'm also bullish on the potential that the crop is still special, and that potential for that yield may certainly be there. It just seems that's a bit to ask when you when you get this far into the game and you're just not sure that the crop is that good when you talk to farmers.
Brian Doherty with Total Farm Marketing is our guest analyst here today. A few thoughts in the wheat complex. It has seemed to me wheat has kind of joined up with the corn this week and has been kind of moving in lockstep to some degree. Your thoughts on that in the wheat complex this week, Brian?
I think if you cut to just the bare bones, corn's down this week, wheat's down this week. Both not that much, but they're down. So that's the lockstep part of it. The disappointing part, there just doesn't seem to be anything that can rescue wheat. It wasn't like the reports had some big bearish overtone to them. Export sales today were, I'm going to say, respectable. But boy, it just is, the trade likes to be short wheat right now. I think long-term perspective, you could argue oversold. However, we've been cheaper historically. I'm not sure if we have relative to the price of what it takes to grow a bushel of wheat, but nonetheless, just a kind of a sickly looking market. Yet the managed money has not strongly signaled that they're done selling wheat. I would argue the same in the corn and potentially beans, but it sure doesn't look like they're aggressively adding either. I just think you've got some drift in the row crops, just on the impending harvest, and wheat's caught up in that as well. This time of year, historically, wheat has not been a strong performer to the upside, mainly to the downside. So we're trying to see if it can't probe for a bottom here, but it's been a disappointing market. There again, if you've got wheat on hand and you think you're going to store for a while, look at the carry in the market. There's some pretty big carry. And then even look at new crop prices. 563 doesn't float my boat too well. But if that's the first sale at 10%, if that's the worst, there's better days coming.
Let's talk livestock. Cattle had a tough day Thursday. We saw heavy losses in both live cattle and feeder cattle on the board. There are some cash bids out there on the table. I know the export report for beef sales Thursday was fairly dismal. It just felt like here we are again, more volatility. Traders maybe ducking and running a little bit in the cattle. I mean, your thoughts as you just look at this continued volatility here in the cattle complex, Brian?
Yeah, yesterday gave up a lot off the high price, and then today really didn't have a good day, right? So you're seeing a market that's back and forth, to your point, a lot of volatility as of late. Prior to that, we had a really good surge I took a chart and shows December cattle trading just above or right around the 205 mark. It went to 225 virtually on nonstop. So, and that happened over about a 20-day window, 20 market day window, maybe a little bit more. But the point of it is the markets seem to be accelerating. And if you look at markets historically and study their movements, it's not unusual to see a market somewhat accelerate upward after a bull market already. It accelerates. Sometimes you see that to the downside. It's a bear market, then it really falls apart. And then it's just kind of done. So I wouldn't say that we've got strong topping signals in the market, but we're also looking at a cattle market that today, and I just want to put my cursor on it here, and I'm on the December 228. It was also trading 228 on July 29th. So we're 2 weeks removed. Same futures price. Some days were higher, some days were lower. Tells me we're consolidating. If cash stays high, we likely see the board move advance. But the key is if cash stays high. To your point, export sales were not all that attractive. I've got to think that the consumer just can't, stomach this much longer. That we're building demand, and so we get a few pounds of beef too much into the supermarket that doesn't sell. That'll show up pretty quickly in the board.
And I wonder too, and I'd have to look at the chart. I don't have it in front of me, but if we were to fall below last Friday's close, I know we had a real tough day last Friday. I'd have to think that'd be a bearish technical for these cattle as we move into this upcoming weekend. And so there could be some things here that maybe we are hitting that tipping point in cattle, but it's hard to say, Brian.
It's hard to say. The supply side still looks just incredibly weak. from a perspective, are we really building the herd? That argument's weak. I don't know if we're really building anything right now. It's just such an odd economic model that to build a herd, it takes so much risk when you could get so much bird in hand for calves or feeders. On the other hand, if the herd doesn't build rapidly, the high prices are here to stay for a while, and maybe 200's the new norm on the low side, and maybe it's 215, 225, 230, that the marketplace can absorb that. Nonetheless, not a reason to exercise good risk management. I'll continue to make the stride toward using put options where you quantify your risk, leave the top side open. That's probably the best tool in this environment. Those who short at futures and have hedges, the hedges are good at 205, right? They're a good price. You locked it in, but the market offered a lot more. So there's some regret with those hedges, thinking, golly, if only I could have, not hedged, right? Well,
Mhm.
if you didn't hedge and the market flipped over 20 or $30, you'd be ready to jump off a cliff as well. So you did the right thing, but it might not necessarily feel that good versus with hindsight, you buy a put, leave the top side open. So we're still pursuing the puts a little more than hedges.
I know in the hog complex, here's a bright spot. We had a little green in August hogs that expired Thursday up to 109.65. But here we are. October is going to take over lead month at a $20 discount to where the August is going to go off the board here, Brian. And so be interesting to see how this hog complex trades as we move forward into the second half of the month.
Well, it's $20 to October and almost or in that $28 range to December. My goodness, that's a lot, right? So it looks to me that, and we've seen this some in recent history, where we see this for whatever reason, this idea that October hogs there's going to be more supply in just 60 days. I don't know if that's just old school thinking where farmers basically farrowed hogs so that they would, have their bigger supply late summer, early fall, or I don't know, but it just seems to me that's plenty of discount given a cash market that's had some really good support underneath it, and given where the cattle market is. So tough to be bearish on hogs. I have no idea why the October contract was down to $1.65 today. I would have thought maybe the trade wants to start buying into that as now it becomes a lead month.
Brian, any final thoughts? Anything else you would reiterate for folks here on the show today?
We didn't touch on it, but milk prices off sharply today. And again, looking terrible one week, looking sharply strong the next, looking terrible the next. So continue to look for pricing opportunities through rallies. I don't think we're in a bull market in agriculture commodities. I know cattle and feeder cattle are, but when you look at hogs, when you look at milk, when you look at corn, soybeans, wheat, uh, the bias has been defensive and weaker on these markets. So keep a vigilant eye for opportunities. Great value to the end users and to consumers on a lot of these commodities, but we still have to scratch and claw for every, let's call it nickel and dime. But I'd like to be a little bit more optimistic that demand in hogs, dairy is going to surface through and kind of win the battle.
Brian, if folks want to reach out and talk with you about their marketing strategies there at Total Farm Marketing, how can they get in touch with you?
I would ask first for a phone call, 1-800-334-9779. I have no idea if you got to dial the 1, but I've been saying that forever. Anyway, 800-334-9779. Or if you want to shoot me an email, Brian with a Y, so BRYAN at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Those are all easy ways to reach out. My preference would be, if you have a question, let's talk so I can actually hear the question as well as read the question. That's how to get a hold of us.
We always appreciate the time and the insight. Brian Doherty, Senior Market Advisor, Total Farm Marketing. Good to talk with you again. Have a great weekend, Brian. We'll talk to you next week.
Yes, sir, Jesse. Thank you. Much appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.